Hey everyone, Daniel Ramsey here with Scale the Show. I'm really excited because normally we interview CEOs, entrepreneurs, and business leaders to get actionable strategies to grow and scale businesses. But today, our focus is on all of the things that are happening post election. Our president-elect Joe Biden's tax plan, what's going on with our economy and inflation, and how that will be impacted. Also, ballots that have been passed across different states in the nation that will affect small and medium-sized businesses. I am your host and founder of MyOutDesk, and today's episode is going to be good. Before we jump in, I just want to note that MyOutDesk, we are not providing tax, legal, or financial advice. We strive to support the success of all small and medium-sized businesses and want to pass along this useful information that is practical and can help your business drive out effective solutions. Please consult a qualified tax advisor, attorney, or investment professional for guidance. We need to make that disclaimer because today, a lot of what we're going to be talking about is tax strategy for small and medium-sized businesses, saving expenses, looking at what's going to happen nationally on, for your own personal pocketbook and what's going on. Now, the Wall Street Journal put out a really interesting article. The bid to undo Trump policy faces hurdles. And here's the thing. Tax policy is something that affects every small business owner. There's only so many expenses that we can put into our P&L and the operating expense section. And because of the tax, policy affecting how much money we have left over to reinvest in our employees and reinvest into our businesses, I think it's a very important topic. And one of the biggest challenges is just simply the fact that under a Democratic president, we will see an increase in not only Social Security taxes, but workers' comp. Insurance will go up, as well as payroll tax and other associated employee taxes. Here's what really struck me. This one is interesting. Corporate tax. Mr. Biden would raise the corporate tax rate to 28%, impose a minimum tax on U.S. corporations, foreign income, and many other U.S.-based multinational companies. What that means is we're going to see, if you're in a high tax state like California, New York, parts of the Sun Belt, you're going to see the total number of tax go from where we are today in the 40s to possibly all the way up to 60%. Okay, our first guest today is a principal with Clifton Larson Allen. And if you don't know them, they're an international CPA firm with more than 6,200 folks in that company. Tim Mahoney is a principal and is going to dive deep into tax implications for the new election. How is it that we've put the fate of our tax plans in the hands of Georgians? And if you're in Georgia right now, I love you. I really appreciate you. But oh my goodness, our entire future tax situation for the next possibly 8 years rests in a Senate race for 2 seats. And Tim, what are your thoughts about what's happening right now in Georgia?
I think it's interesting that it came down with it. They have the rule that you have to win at least 50% of the votes, and so as of like Wednesday, I think we were pretty certain the Democrats weren't going to have control of the Senate. It was going to be split between the House and the Senate, and the presidency wasn't really going to be able to dictate what was going to happen when it came to the tax law. Everything was going to stay status quo. And then as they finished counting all the votes, the incumbent Republican dropped below 50%. And so now we have two special elections that don't take place until after the end of the year. So we can't even plan accordingly for what may end up happening. The consensus is it probably will split 1 and 1, but there's a lot of money and a lot of effort that's going to be poured into those 2 seats. And it's a really contentious time right now. And depending on how things pull together, I mean, it's really hard to get a crystal ball out and say with any certainty that it'll end up being the way we want it to. but it does look like it'll probably end up splitting at least 1 and 1, and then the Republicans would still have 51 Senate seats.
Got
And
it.
as long as there's a split, there's probably not going to be a lot of changes.
Got it. Got it. Well, for sure, we want to talk about changes because President-elect Joe Biden has squarely aimed his tax plan at individuals making more than $400,000. What are your thoughts around, if he wins, if the Senate doesn't go the way we hope it would go? How is that going to impact small and medium-sized businesses here in the U.S.?
It's really going to cause costs to go up, because a lot of it's on the payroll tax side and lifting the, caps on what people pay in the Social Security payroll tax now. You're seeing, probably a change with capital gains rates, getting eliminated at higher income thresholds. I think overall what he's talking about, is a slight increase in overall rate structure, but that's just a small piece of it. I mean, out in California and New York and some of the other high state tax, we might get our local tax deduction back through all this, and so it won't impact everyone quite so badly. But they're predicting in a lot of states a marginal tax rate if you're someone that makes more than $400,000 in excess of 60%. And that's all in. That's your payroll taxes. That's your income taxes, and a lot of that comes down to right now. You get to about $130,000 and you're capped out, and so you're automatically now when you get up to that $400,000 mark, you're adding another 6% on top of what you're ordinarily paying. That's not something that's easy to get around. Because a lot of small business owners, an LLC right now, for example, that gets capped on your self-employment tax, but under this new tax plan, it wouldn't. You'd continue to pay payroll taxes up to a much higher threshold.
Okay, so what you're saying, and what's interesting about this is Biden's plan, and maybe Democrats as a whole, their plan is to raise taxes, specifically on wealthy and business owners, and go from where we're in a mid 40s kind of range for the highest, possible tax, number to above 50%. Is that kind of the bottom line?
Yeah, the bottom line, it depends a little bit on what it is you do for your business. But right now, and we'll just use, California, since that's where you and I are sitting out here right now, you make $400,000 now, anything above that, you're getting taxed, roughly, 48% between the state and the IRS.
Yep.
And they're talking about what the changes they're moving towards, that it would be like 61%, 62%. So it's a big increase for the income above $400,000 for sure, up to $400,000 for sure.
So as a CPA and a principal for Clifton Larson Allen, what is your advice to the small and medium-sized businesses in the U.S. that would be impacted by this shift in the tax rate?
You need to plan ahead. You have to look at what is going to be potentially coming, because it's not just income taxes. Income taxes, there might not be a lot you can do about it, given the law that it's set up. And so what ends up happening is things cost more, because you're going to still push to get to the same net income amount that you were making a net of your taxes previously is generally what's going to happen. But labor costs are going to go up, because all your employees are going to be wanting to be in the same boat. Now he's saying that lower, it may not increase tax on the middle class, so you might be able to control some of your labor costs there. But I think entity structure is going to have a big play in what's going on, how you're getting the money. That pass through entities may not be as advantageous as they were previously. So each person's situation is going to be different, but there's strategies that can still be put in place to help move income to a better tax advantage position. But you need to do it in advance. You can't wait till after the fact. So that's the problem with the January election versus the December elections. Hard to figure out exactly when this might be, but it's other factors. It's the gift tax rates changing. It's the exemption on your estate planning that could be changing. It's the changing capital gains to ordinary income that's potentially changing. So it's hard to say exactly if they'd be able to do everything all at once, but we know that nothing will be able to be done if it's split. So I guess if this is a big concern for you, I guess you should figure out kind of what's going on with some Georgia politics and maybe make a donation or two to the side you prefer.
So we're all in the hands of Georgia as we started the show off. Tim, thanks for joining us today and giving us your feedback on what's happening with the tax bill.
Absolutely. Thank you for having me.
Here's what's interesting. And I think if you're an investor, a small business owner, or anyone in the world considering, tax as part of your cash flow, because, as a small business owner, we take our profits and our income and we use those to pay our portion of our share of taxes. And in many states, that already is in the 40 to 50% range. What's interesting, though, is according to taxfoundation.org, if Joe Biden's tax initiatives do pass, we will see an 1.62% reduction in total U.S. GDP, gross domestic product. That's the total amount of goods and services sold by everyone in the U.S. And basically what you're seeing because of that is this concern or this worry that the dollar is going to be worth less. And because the dollar is worth less, you're going to see inflation. And if you see inflation, what that means is what you have, your purchasing power as an entrepreneur, as a business owner, reduces. And to break all of that down, I'll give you an example. According to CNN, another article today, just in the paper, the median house price of all types of houses across the U.S. Was $311,800 in September of 2020. What that's done, basically, it's up 15% from a year ago. Up 15% in 1 year, which is a massive increase. Michael Klein, the founder of the NRBA, which is a national real estate brokers association that focuses basically on following national trends for foreclosures and real estate data. He just sent a text over, and I like to quote people. He says, depending on the new House seat and how strong the Republicans' control of the Senate remains. So all of this tax stuff is really boiling down to what is going to happen in Georgia and whether or not the president-elect, Joe Biden, and the Democrats in the Congress will be able to actually make any headway or change to our tax code. And I think you're also seeing gold, which is a harbor of value. Gold is where investors go when they're nervous about inflation. Gold is where the smart investor puts a portion of their total income and total savings, because as inflation goes, so does gold. And if you look at spot prices over the last 2 years, there hasn't been a massive change. But if you change the window down to 1 year, you'll see that gold prices over the last year have increased. Spot prices for gold have increased by 60%. And so all of this conversation, everything that we're talking about, is about controlling the things that you can control, controlling your expenses as an owner, controlling your employee costs, and controlling really the one thing that you can control, which is what you're spending every month for your business expenses. And real quick, I want to introduce a clip of a customer at MyOutDesk, Brian Woods. He's a business person in Florida, and he is an international speaker, trainer. And it's interesting because he equated hiring a virtual assistant to hiring a standard employee at McDonald's. And that sounds strange, but here's what's happened. On a national basis, there are more than 20 states that have passed legislation raising the minimum wage well above the federal minimum wages, meaning our federal minimum wage right now is $7.25. And there are only a handful of states, really 3, that have no minimums of their own. And yet what's happening across the country is this drive and this interest in really making an impact for the low income earners, meaning our country has decided to pass legislation increasing the minimum wage.
Florida, in its infinite wisdom, not only was last Tuesday kind of a interesting day overall that continues on, but Florida had a ballot proposal that I am shocked actually passed, but we are now going to be raising our minimum wage $1 a year for the next 5 years. So it's going to, by 2026, it's going to be $15 an hour for minimum wage in the state of Florida, which means that you can go to McDonald's and flip a burger, and that's $15, which means that everybody above minimum wage, if it doesn't go up, is going to, take a haircut in their purchasing power. So, you look at the power of a VA, right, and making good wages where they're at, versus, if the hamburger flipper is making $15 an hour, I'm not going to be able to get an office person for $15 an hour, right? So, I mean, that disparity just keeps growing and growing and growing. I already signed an add-on as well. We're going to be putting a inside salesperson in place.
Nice.
Although I'm not, I'm not going to take I have a full, it will be a full-time position from your side of things. Any lead that I generate, I want my process going through this, and I want somebody on it before it goes to an agent. I want somebody else dealing with that, and then when it's ready to go to an agent, then it goes to an agent. So that's a nice value add that most agents don't have.
Okay, and as you heard there, Brian was considering hiring a virtual assistant, and because the minimum wage is going up in Florida, he has moved forward with that action. And I think it's not a bad thing for you if you're considering growing and scaling a company, because MyOutDesk is actually 70% of the cost of traditional employment options. If you at all feel yourself needing talent or wanting to scale your business, I want to offer MyOutDesk as an opportunity. And the thing is, there are things coming down the pipe that if you prepare for, you can actually overcome. And here at MyOutDesk, the focus has always been on talent and driving revenue and scale through finding great talent. And one thing, if the ballots measures have passed like they have been, increasing the minimum wage, you're going to see multiple opportunities across the country. One, the concept of employees costing more, it brings this onus back to the employer. It brings us as owners, as CEOs, and as founders to really consider when we're hiring somebody that it's the highest and best use, and that you're hiring an expert and you're not giving them tasks that really don't matter, that don't really help your business scale and grow. With that respect, I think it's really important that you get some strategy going in terms of what's going to happen for 2021. Who are you going to hire? What's the best, highest in use of the team that you currently have? And what could you give away? What could you give to perhaps a virtual assistant or some outsourced labor in order to grow and scale your business? On this show, we focus squarely on helping you have the tactics and the information to make moves that empower you to grow and scale. Over the next couple of weeks, we'll be releasing more information about the tax strategy, definitely going to give the tax moves that you need to make right now in 2020 before the election and before the transfer of power to a new administration. So I hope you've enjoyed your time with us here at Scale the Show. And if you have, please click below, subscribe, like, and give us comments, because we appreciate your time and we know how valuable it is. Again, my name is Daniel Ramsey. I'm the CEO and founder, and I appreciate your time.